Thank you, Harish, and thank you, Ripa, for giving me this chance to share my views on the latest amendments in the IP regulations. Okay, to start with, what I was seeing is that there are different regulations there are different amendments, so many amendments that have come in. Uh, One second, now let me put the correct one. Okay, sir. So I was trying to read or go through all these regulations as a preparatory for this. Of course, I have gone through them on and off like that, but that doesn't help us in understanding the overall where we stand in the this one. Okay, so that's why what I try to do is that I try to incorporate all these amendments, highlight these amendments rather in the regulations. So luckily for us, the regulations have come in the IBC portal only. But as I said, by the time I could prepare, the revised regulation also has come. That means I got it done up to 2nd June. But subsequent, then the 2nd June wala only has come recently. But after that, now one more has come as a 9th June, which I couldn't update into this. So we'll try to go through these amendments and you're able to see my Harish. You can see the screen, no?
Yes, we can see,
Okay.
sir.
Okay. So what I had tried to do is that there are about this many amendments what you can see in my sidebar. So these are the major amendments, okay, rather. Okay, so we'll try to go through them one by one. And there are also subsequently there are two more amendments which has come as a 9th June. That also we'll discuss. And there are amendments in the forms to the CIRP regulations. That also we'll go through. So the first amendment speaks of 2B. 2B comes in a picture where at the time of application by the operational creator. So in case of operational creator, what is normally happening is that the operational creator files the application and it gets admitted and he is no more in the picture because the fight is only between COC, CD and the RP. So the operational creator is nowhere in the picture. So if it doesn't give any information, 99% times we all end up in filing a 19.2 application. And that 19.2 application, we don't get any information and then we'll get stuck everywhere. So that's why what this regulation amendment says asks us is to the OC while filing the application should provide his details first with an application under where he has filed GSTR1, whether his claim is genuine or not for that. So his extract of GSTR1 and GSTR3B. Now GSTR1 and R3B are not easy to get because if anybody's of your filing the GSTR returns up to 500 invoices, I think there's one mechanism. Above 500 invoices, there's a different mechanism, and it's difficult to get the extracts of that. But still, that's a requirement here and details of the if he has received any payment and details of if he has transferred the assets. So these kind of declarations, more of that nature. So that is what is required in this case. So the operational creditor, when filing an application, should give all these additional information. In fact, all the pending applications are also the IB NCLTs are asking for this kind of information from the operational creditors. Then we'll go to the next one, which is the 2E. 2E is the submission of information by corporate applicant. Again, here also same problem. Even though the section 10 application is filed by the CD himself, most of the times again, it is ending up in filing with 19.2 applications because the CD is not cooperating. Because once the case gets admitted, the company gets all the basic facilities of moratorium and all those things, but he is not worried because then the fees also has to be paid by the COC only. Fees also not paid by the CD. So in these kind of situations, the IBBA regulations are amended to provide for additional information by the CD regarding the company. Here, the requirement is very lengthy because, again, the objective is to avoid a 19.2 application by the RP during the CRP process. Sir, if any of you have any clarification or anything, we can discuss it as and when only. So here, see, most of the cases, no, the CD doesn't give books of accounts. There is nothing that RP can do. So for all the eventualities that are there, so that's why this regulation is a very lengthy regulation. So the first is the following information related to books of accounts. list all bank accounts, particulars of assets. So I have also done some Section 10 cases where the RPE, the CD has been saying some, not Section 10 cases also, but where the promoter doesn't, he is trying to avoid only. So so we are not able to make any progress in the CRP process. So particulars of assets. So because first he has to declare what all assets he has. Because sometimes the balance sheet disclose some assets, balance sheets don't disclose certain assets. So the mobile properties, investments, the corporate applicant shall also furnish the following documents. First is regarding the assets. Second is regarding the documents. Detailed secured, unsecured creditors with amounts outstanding, list of all creditors, list of ongoing litigation. See, certain things, as I said again, certain litigations may be disclosed in the balance sheet. Certain this one may not be disclosed in the balance sheet. List of employees with their designations and workmen, and statement of transactions related parties details like this full list is there, but entire list has to be given, and the status of statutory compliances, whether GST or income tax or uh, any other TDS kind of a things. Then any development agreements. So details of demand notices, assessments and recoveries from income tax, sales tax, customs, everybody. So this is a full list, and any money laundering act also. Like this, they put everything in this. So at the time of filing Section 10 application, you should the the CD should be able to provide all this information. Now, what happens if CD doesn't have this information? Does it restrict the CDs from filing Section 10 applications? If it's a genuine Section 10 applicant, he'll definitely be able to comply with it. But if he's trying to fraud or something, then he'll not disclose most of it, because some of things may go also against him. Because if there are any related party transactions, what happens? So these kind of problems also will come for a CD if he's trying to avoid and do certain things, and file a Section 10 application. So Section 10 applications will continue. Only thing is that only genuine Section 10 applications will come because of this detailed requirement in the application form. Earlier, it was only we had to prove. Earlier, the requirement was only that he should prove the debt and default, nothing more than that. Whereas now it is a full-fledged, detailed one, which, as per IBBI, what the RPs were facing problems all these days. So he is trying to cover up all those things in the amendment. As I said again, if the genuine Section 10 applicant, he'll definitely be able to comply with it. Suppose he has really lost money in the process and then trying to revive the company through a CRP process, he can definitely come. But if his objective is to defraud somebody, he will not be able to comply with all these requirements, and consequentially, the Section 10 application will not be admitted. And RP's role in this kind of a thing will be, if all this information is there, the RP's role is easy. If this kind, otherwise, no, half the time will be left in groping in darkness for this kind of a finding for this kind of a information only. Then next amendment is the uh,
So this list can be used by us for Section 7 and Section 9 application also, while demanding the information from the CD.
true.
This
That
list
is
was
true.
very exhaustive,
This is an
and this
exhaustive list. That's true. That is
yeah,
true.
this list can be used by us as an RP, IRP for asking the information from the CD, even if it is Section 7 or Section 9 application.
So normally what we do as an RP in any case, section 7, 9, 10, or anything is that we have a standard template of list of documents that are required, which most of the companies cannot fulfill. Because I was also a CFO and company secretary. The list will be like minutes book from the date of incorporation till now, and all the asset register. Most of the companies don't have an asset register, or they don't maintain it. Maintain in the sense that suppose a asset register says that particular room has 10 chairs and 10 tables. Now, when you move a table and chair from room 1 to room 2, you should have a asset movement register. So that kind of a exhaustive thing is impossible for a regular running company also. But as you said, what you said is right. If somebody is not doing that kind of a exhaustive list, sending them to I suggest actually to all the RPs, day one, you get take an assignment, send the exhaustive list to them, which has more than this. Like I said, minutes of meetings, and general body fixed asset register is main thing, receivables, status of receivables, like that. We used to send a detailed one, to tally backup, all these things. And because that will be useful to us in two methods, sir. One is at the time of filing 19.2 application. Of course, now that has also been modified in the sense 19.2 section has been substantially modified. So one is filing a 19.2 application, or supposing the company has done some fraud, criminal frauds and all that, and it goes to SFIO, EDC, ED, or CBI kind of a things. At that time also, this kind of a list will help you, because saying that he didn't hand over to me. Because I have seen promoters who tell this kind of agencies, SFIO kind of agencies, so from that day onwards, I didn't go to office only. I was not permitted because I didn't have any power. Entire thing was taken over by RP, so I don't have anything. So that kind of a problems have been coming for all the RPs and the investigating agencies also, because at that stage, even investigating agency doesn't know whether to go for behind the promoter or behind the RP. RP says he didn't get, says, this man, promoter says that he didn't have access to the books after a particular date. So in both the cases, that's why the section 19.2 also has been substantially amended, and there is a format for that that also will come to towards the prescribed for this purpose. So how to hand over, how to take over also. Then next is the uh, appointment of RP. So in case of appointment of RP, what is happening is that earlier, whenever RP is appointed, IRP is continued as an RP also, we had to file an application with NCLT and get the this appointment ratified by though it was more of ornamental in the case of NCLT in that role in that case, because COC has recommended IRP as RP, so RP will continue. But now what the amendment says, so we had to file an application with NCLT and take a order appointing the RP once again. But now this amendment says that in case IRP is appointed as an RP, no separate consent is required, no separate approval from this one also is required. Our NCLT approval is not required. That means it's only intimation, is there is no filing of an application by the COC or RP to NCLT approving his appointment. Now, the problem initial days of IBC, I remember that what we are doing only was filing a memo saying that I have been confirmed as a RP, IRP to RP. So there's no change. But what happened is that there were some, at that time, no, there were some IBBI formats that were required. One of the formats said that when IRP is appointed RP, reference was given to one NCLT order, by which order you are appointed as an RP. So to fill up that column, at least we have to get a NCLT order. So that was the tricky position there. So at some point, we all started filing IAs for the appointment of conversion of IRP to RP. Also, we started filing the IAs, and they used to get an order. And this actually two ways. This is a two-way benefit for both of us, in the sense that for us as an RP, if I am IRP to RP converted, it is a simple process, so it is done over. For NCLT also, the workload will be less, because every case, most of the cases, IRP is continued as an RP, and one set of IAs is less for the NCLT. That's what we can say there. Okay. So the next one is that in case of replacement of an IRP as to RP with another RP, written consent is required. This is the second one. So it is making a differentiation between IRP is continued as an RP. It is making a differentiation between IRP is replaced by a new RP. There we need to get this one. Sir, you are saying something.
One
May I
minute.
say something?
Yeah. Continue, sir. Ravi Prakash Ganti, sir, please continue.
Yeah. Okay. This regulation 1A, the amended one, there is a problem here. The Amendment Act specifically deleted the requirement of even informing the adjudicating authority. Okay. But now that it says intimate such decision. Now there is an order from the President NCLT that everything that you do with any adjudicating authority has to be by way of an IA only. So nothing has changed. What the Act wanted to give relief, now unfortunately the board through this regulation has brought it back. Because they don't have control over the internal regulations of the NCLT. And that instruction is very clear. You cannot file anything except as a IA. So how do you intimate the adjudicating authority? You can't send an email. It's not accepted.
Sir, what I was thinking is that approval means I have to file IA.
No, forget it. Even for, see,
no, sir, intimate means I should file a memo.
No,
intimate means I should file a memo.
No, 1 second. Let us look at liquidation reports. Now, liquidation reports were never meant to be approved. They were only to be taken on record. Even today, they are taken on record. When you just file, okay, fine. They might ask you something, they might not ask you. Originally, we were filing liquidation reports only through email.
True.
Then the specific order came. Now it is even listed as an IA number. So same thing will happen here. This is unfortunately the IBBI has missed out here. We asked them, but there is no reply as usual. But there is a problem because there is no other way in writing of how to intimate NCLT. Unless the NCLT registry makes out an amendment to tally with this, that this is not required as an IA, please send it as an email or something. That's fine. Till that time, it has to be IA. So let nobody take chances on this. As of today, as the rules stand, even intimation to NCLT about confirmation of IRP as RP has to be by way of an IA only.
Okay, because I was under the impression that intimate means only memo. Because
No, progress reports in CRP are
you're right.
generally not filed, so that would not apply because there is no mandatory requirement. Only certain NCLT in certain cases might ask you. So, I mean, IP should be careful. Don't take chances on this.
Sir, one question over here. So whether if we are intimating the progress report by email, whether it will work? No.
No,
No, no.
progress
Finally,
reports.
only.
First of all, progress reports mandatorily are required only under liquidation. Okay.
Yes.
In CIRP, it might be by way of a specific order, in case admission order, whatever. So the mandatory requirement is liquidation. In liquidation, the NCLT system numbers the IA for liquidation report in a different manner altogether. And it has to be by IA only. No memo, no email. वो पहले होता था. It gets listed, it gets heard. It might be just a 30-second hearing, but it still gets listed and heard.
That's true, sir. In fact, sir, in Bangalore also, our NCLT requires that we should file a monthly report. So we keep filing the monthly reports on all the CRP process also. But in fact, when there was a stay on the process also by some NCLT or High Court, still we, as a routine, file this because the NCLT order told us to file a report. We should keep filing reports because we are afraid that in case we don't file a report on a monthly basis, again that becomes an issue. So
yes, but that
certain
is
things.
specific, case-based. That is not based on law. That's a
That's right.
direction of the court. So it is very specific. No other NCLT really asked for CIRP reports. It was not meant to be. There was no intent to have a report during CIRP. The whole point was that keep the paperwork burden as little as possible, but it keeps increasing with day to day.
That is true, sir. Next, we'll come to extend and cooperation. So earlier, the cooperation extension, actually now that I said, as I said earlier also, section 19.2, we have a big impact on that, saying that all the people who are is or was, that who is currently in service are extending service to the company, including auditors, so ex-employees, everybody has to extend cooperation now as per the revised section 19.2. So the same thing is covered here. This earlier, whatever it was, no, we now it will be saying that any person covered under section 19. That means we can go against the auditors, ex-employees, everybody. We can ask them to cooperate with us. That is the section 3A, duty to extend. So in many places, wherever the extension, the cooperation was sought, everywhere it has been changed to any person covered under section 19. Any person covered under section 19. So this now RP has a bigger audience whom he can approach for the information, whether currently working or old retired or an auditor, anybody else extending service to the company when it was working, all those people, the RP can go ahead and ask for information. And if they are not giving information, he can file a 19.2 against them also. So that earlier the auditors, in fact, has seen companies where employees resign one day before the CRP commencement date so that they don't come under the ambit of 19.2 because they're all ex-employees. But now that loophole also has been bridged in this. The next is the intermediation professional, as the case may be, may seek from any creditor. So this is a very important thing. See, what is happening here is that once the CRP starts, the RP can seek information from the financial creditor, statutory authorities, or any creditor, the information that he may ask. Earlier, our right was only against the CD. Now we have a right against the bank or any other creditor, any also to give us information. So this is what this particular section says, regulation says. And the next also is the it also says that every creditor shall at the first meeting. So one is RP has a right to ask information, and it also mandates the creditors to give information in the first meeting itself. So these are very important, which where RP need not say that I'm lacking information, I don't have that information. Earlier also it was there in an indirect way, saying that banks have to give their stock statements and all that. It was there earlier also. There are any valuation reports they have to give, and the forensic audit reports if they have done all those information the banks have to give. Earlier also it was there, but now again it is extended to statutory authorities and other creditors also. Similarly, in the first meeting, everybody should give the information to the RP. So this is a big thing. So the moment in the first meeting, every RP should compulsorily ask this, saying that, okay, now as per this so and so regulation, I am eligible. You are required to give me information. So please give me the following information. You make a big list and give it to him, whatever you think is relevant for that company, which may be in the records of the bank. It is not just a claim form or just a loan agreement. Over and above that, banks will be having a lot of data because they'll be monitoring the company unit on a day-to-day basis. So for all that, they would have got some information which you can ask them. The next amendment comes in the okay. Now, okay, this is also a major amendment that we have got into now. Earlier, RP was supposed to only collate. Now, what is the definition of collation? Even before joining IBC, I never heard a word like collating. But here the word used is collate. Collate means what I can do, what I cannot do. There are a lot of discussions and all that. So if when I have determined a particular claim also, there were complaints against me, because what I said in those times was that unless I say that, suppose X bank gives me a claim of say 1 crore, I admit it for 80 lakhs. That means I have determined literally. Similarly, the other claims also, OC claims also. If there are OCs, major OCs, if I had to give somebody 10% operation creditor and all that, that I had to admit it. I had to value it. Then only I can say that, okay, you are in the committee or outside the committee. Similarly, at the time of plan also, we should know who is eligible for what. For all those things, indirectly, we are doing it. But the Act recognized that we should only collate. We can't determine any claim. So that was actually a contradiction kind of a thing. So now that problem has been resolved. Now the interim resolution professional and the resolution professional, as the case may be, after verification of claims, either admit or reject the claim in whole or in part, and shall communicate his decision or admission rejection to the creditor along with reasons within 7 days. Now this is also all the more important because now in the liquidation process, the process of verifying and admitting claims has been deleted. So that process is not there for him. He has to mandatorily rely on the admission of claims by the RP, because there what they said is that in the liquidation regulations also, what he said is, if RP has admitted a claim or rejected a claim, liquidator cannot reopen it. Almost that is the sum and substance of that liquidation regulation also. Wherever the claim was not made during CIRP period, that only has to be admitted or verified by the liquidator. So this is a major thing, major amendment. So which all of us should take care that now we need to admit or reject the claim, and within 7 days inform the creditor regarding that, so that if he is aggrieved by it, he can go for appeal with NCLT. Now, next is the transfer of assets. So this is again a major amendment. I don't know how far it works. Even I don't know. See what if you have seen section 28A. Actually, the regulation and section are same in this case. Section 28A provides is that wherever there is CD has particular assets and there is a guarantor, either a personal guarantor or a corporate guarantor. So they have certain assets, and that assets can be clubbed into the main CD's asset and do a combined CRP process. That is the whole understanding here. Now, if suppose one creditor has a share in this CD and also holding a personal guarantee. Now, if he gives off his rights as a personal guarantor against a guarantor, a corporate guarantor, a personal guarantor, then the assets are not transferred to CD, but both of them will be considered as one during the CRP process, because if you transfer those assets into CD, there's again a tax implication, GST implication, all those things. So that assets are not transferred, but both will be combined as one what you call one asset, and then considered in the CRP process. For that, okay. Now, which creditor will agree to put his personal right into the common pool is one issue that has to be decided. For that, again, they have put restrictions in that. That means those there are other creditors also in the corporate guarantor or personal guarantor. Those people should agree, and everything should be brought, and then everything should be brought into the IM. See, assets of PG and corporate guarantor can be clubbed with the CRP, whether creditor book took position prior to or during the CRP period. So the creditor can take, suppose the personal insolvency starts parallelly. So whether it has happened already or it is happening during the process of CRP process, both the times the same. The particular creditor can permit the main CDC CRP COC to take club that assets also into this and make a consolidated CRP process.
May I ask a question?
Tell me, sir.
See, here, just that point you are referring to about it takes taking possession of the assets of the personal guarantor
Right.
or the corporate guarantor. Now, the IRP, as per the earlier sections, can take possession only of the assets belonging to the CD. Now, does this give him an explicit right to take possession of the assets of the personal guarantor? And two questions come up.
So no, one thing, sir, what happens is that here.
Just a moment, let me finish my
okay.
question.
Okay,
please.
right.
One. Second question is that if somebody has to take possession of the assets of the personal guarantor, the guarantee has to be invoked. In all the cases, it is not necessary that when CIRP starts, the personal guarantor's guarantee is invoked. There are many cases where it is not invoked. So, how in such cases the RP derives a right to take possession of the asset when even the guarantee is not invoked? I mean, I think there are a lot of legal challenges may come in this particular area. That is what I believe. Yeah. Yes, sir. Thank you.
Sir, let me explain. This is the enabling provision, first of all. Okay. And
Agreed.
it has so many ifs and buts. See, one is that suppose one creditor, suppose I say State Bank, I am running a CD where State Bank State Bank has also taken action against the personal guarantors. Or there is a corporate guarantor for this company where again State Bank is a creditor. Now, State Bank can independently run that process. Nobody can stop that State Bank's right. Only when State Bank feels that by clubbing his personal asset with the CRP assets, then only this section can get operational. If the State Bank feels that no, I will run it separately, but why should I put my specific right into a common pool? Then it doesn't work.
No,
See,
there
what
is
is happening, sir,
Yeah.
let me complete. So what is also happening for the IBBA is that there are so many cases where if you club, it would have been better. But again, as you said, no, RP doesn't have control on the other assets, other corporate data or main RP. In fact, initial days, main RP, CD's RP was not supposed to be the RP of the personal guarantor also. That was the
Yes.
initial requirement.
Yes.
Then they have reversed
changed
it.
it. Yes.
Now the change is that RP can become personal guarantor's RP, but RP can't become liquidator of the same CD. So they're also doing some thing, but then see, if it is possible, if everything goes well, there is an enabling provision. Now, out of suppose there are 100 cases which come under this bucket, only 5 or 6 may get help in this. And wherever earlier people were thinking of clubbing, they were having a problem because there is no enabling provision. Now they have done an enabling provision. So in your case, suppose you are a CD or RP of a CD, you can ask the bank, sir, do you have any control on the personal guarantee asset? Do you want to club it? He may say yes. He may say 90% chances that he will say no. Because
see,
my personal right, why should I give up?
I will tell you here, when there is the promoter director is a guarantor, the difficulties are less. Suppose a third party who is a guarantor, then these things become much more difficult.
No, sir. No, we
May
are
I
talking about the
intervene? May I
creditor's right.
intervene? I think we are straying away from what the intent was. Okay. When the Amendment Act provisions were, because this is coming from the amendment, the regulation is only how to do it. What to do was in the Amendment Act, which we had covered in the sessions which we had on the Amendment Act. So whoever attended it, I would like them to recall. See, this is an enabling provision based on difficulties faced in specific types of cases. What is the intent behind it? The classic example would be land belongs to the promoter, factory belongs to the CD. You can't sell the plant and machinery without the land going with it. Similarly for real estate, very common. So this provision has been, here the possession is to be taken by the creditor holding the security interest, not by the RP. Please understand, it is the creditor that who has to take the security possession and then offer it, because without that, no resolution is possible. It is not meant for any disparate assets. Suppose there are PG assets, some agricultural land, which has nothing to do with CD. Now, the intent here is not to club that asset here. No, that is not the point. That where the resolution of the corporate debtor otherwise would be suboptimal or cannot even happen without that asset being clubbed, this is for that. It's a limited situation provision. It is not meant for, pull everything from all PGs, all CD. No, that was never the intent. The intent was very clearly where to enable a better resolution. It is not a recovery process that you pick up all assets from everywhere and put it here. Okay. So the classic example, again, land belongs to promoter, factory or building, or the building being constructed is for the CD. This is that in such situation, this provision is to be utilized, because without that, resolution cannot happen.
So possibly it is arising out of that particular Supreme Court judgment with Amita, what is that, where they said that subject assets can be taken, land and building where it is there can be taken. The Supreme Court
Not
judgment,
Supreme
real
Court.
estate matter, real estate matter, it was there.
Multiple cases. In fact, one Calcutta NCLT, they approved a plan without the approval of the guarantor or the holder of that asset. No, it can't be done. So, which was wrong, legally wrong. It can't be done. But that's how they did. But looking at that, there has been brought in because, see, there is a presumption here that one of the creditors who is part of your CIRP has a security interest on that asset. That is the first presumption. Second is that that creditor has taken possession of it, which means whatever guarantee he has to invoke and all
Yes,
that.
yes. I missed it's a creditor who can take possession, not the
Yes.
RP. I mistook it as RP can take possession. That's what
And this is the
on.
classic pooling of securities concept which was there in CDR. Huh? There's nothing, it's not a new concept by itself. It is just being brought into IBC to enable resolution.
Yeah.
So, but sir, in this case, if already pooling of assets decision is normally taken by a creditor who has a possession already, this provision is just aiding that entire thing.
No, see, you might have a possession under SARFAESI. That asset
Yeah.
doesn't belong to the CD. The creditor in normal course would be, getting rid of it, etc. But if it is like, see, this inseparability of two assets, one belonging to one party and another to another, that is the situation this provision wants to solve.
Correct.
So the same, that creditor has to be part of your, CIRP, usually is. Okay.
Correct.
Then you ask, are you willing to, either the creditor himself can come and forward and say, because without that it is not going to happen. Nah? It's illogical. Land belongs to somebody else. How can you do a resolution without the consent of that?
Correct.
So that is where they have to come in. This provision enables you to do that, because without that, people were, once in a while they have tried by using SARFAESI provision, because SARFAESI gives the right of the creditor to pull the asset. But it is a gray area. Anybody could have challenged it. That
But
IBC
sir-
doesn't specifically provide. For example, IBC doesn't specifically say that first charge is superior to second charge. That was a problem. People were misusing it. So this is to bring in that now you have a mechanism how to go about it.
So in fact, I had another similar case where land and plant and machinery, everything belongs to the CD only, but access to that was through the asset of the promoter. But promoter's assets were charged to the bank, same bank only. So now nobody was coming for
No,
the
no, no. That is a
bank.
different law. Don't mix it with IBC.
Ah,
That
no,
is
no, sir.
that is Easement Act, where landlocked assets are there. The party is duty bound under Indian law to give access.
No, but what was happening was nobody was coming for the plan. So the corporate creditor has to ultimately liquidate the company and sell that and this in the liquidation. So that kind of a thing can be avoided in this, if this is possible.
No, see, even suppose the access is through somebody else's, not guarantor, then what do you do? Third party.
Then it is a problem only.
So that is
Okay.
where Easement Act comes into play, not IBC.
Okay.
Sir, if a creditor who has a minority stake, just adding it further for the sake of argument to get an understanding, a creditor with a 20% stake who has an access to that particular property, who has possession of the property, is not willing to give it to the resolution professional. Resolution professional, can he place that by force and take the majority consent and go ahead?
I don't think that is possible because
No,
it
no.
says creditor has to take possession.
No, no,
Then
no.
it comes to you.
No, no, no. Look at no. It's not creditors taking position. It says the other way around. When I read it again,
It's
I'll
not.
tell
It's
you.
not that simple. See, cram down provision by itself is there in IBC, but in an indirect manner, not so much like in the Companies Act. So whenever you find a gap in law which you don't know how to circumvent, or you go to NCLT. Okay, this is what is happening.
No, but sir, but in his example, if the minority creditor has a personal guarantee assets as security, he may not be willing. So
No,
this
which is
you can't.
required for the resolution of this corporate debt.
Correct.
See,
That's
it has to
exactly
be
what I'm saying.
required. For example,
yeah.
like land, the land which gives access. Okay. The minority creditor has it. He doesn't want to say, "Main to chhodunga nahi." Now that you can't do that under general law. That's not IBC. That is other, the constitutional right to free passage, all that. So you can't do it yourself. No COC can. You don't have that power. Only judiciary has that. So you have to go to NCLT.
Yeah, because the issue is the dispute can be because the commercial understanding and value one is
Anything.
ascertaining
Yeah.
and all that.
Put anything.
Yeah.
In fact, if you have seen recently, just few days back, there was a 12A which was crammed down upon the creditor by the NCLAT. The creditor was not willing to say, because even though the entire money had been deposited, full money with interest, and the creditor was saying, no, मेरे को तो CIRP continue करना है, the NCLAT said nothing doing. Take the money and go. We are recalling the admission order.
But sir, can directly NCLAT decide without NCLT deciding 12A?
No, this was because the creditor was saying, I won't even go. I mean, I will not accept that. It went, as usual, the appeal goes to NCLAT and it then starts about settlement. Then in this particular case, the entire money was deposited by the promoters in NCLAT.
Yeah, but my question is,
no, they would have reverted it back if the creditor had said yes. But because he was saying no, they recalled the admission order itself.
That's it.
Recall the admission order, not a withdrawal of
Not a 12A. It's not a 12A then.
Because I am facing a challenge right now where a 12A is being heard.
Let us not get into
No, 12A is being heard.
I was just giving an example. We are on 28A. Let's stick to 28A.
Yeah. So the next next amendment is RP's duties. Okay, now in case of a 28A, what are the duties of RP? Where approval is granted by the committee for the corporate debtor for permitting transfer of such assets as a part of its insolvency resolution, the RP shall ensure that the proposed transfer is disclosed in the IM, specify the particulars of such transfer in the request for resolution plan. So you have to put in the IM. Put in the IM, one. Put it in the RFRP document is one. And ensure that when the plans come, all how they are being treated in the this one. That also he has to do. Hello?
Sir,
Hello?
repeat, sir. Repeat this point, sir. There is
Okay.
a disturbance.
One second.
point,
Let
right?
me, I think my this one, I'll change the internet right away. One second.
No, we can hear you.
Okay,
No problem.
sir. Now, okay, sir. See, this is the process where what RP should do. That is the next amendment. This sub-regulation 3. It says that where approval is granted by the committee. Okay, now every thing is set, and personal guarantor or corporate guarantor assets has to be considered by this in the CRP process. Then what RP should do? RP should first include it in the IM, include it in the RFRP document, and also ensure that when a plan comes, the plan should cover the treatment for both the company's assets and the personal guarantor's assets or the corporate guarantor's assets. That's how it is. So that has to be taken care. Then next comes the facilitation of transfer of assets, where approval is granted by the committee of creditors, corporate debtor, or as a corporate guarantor, permitting the transfer. The decision profession of such corporate debtor shall ensure that the proposed transfer is appropriately disclosed in the IM. So these actually, I think, the previous 28A is with reference to the main CD. 28B is with reference to where the corporate debtor is a corporate guarantor undergoing corporate insolvency process. Suppose you are an RP of a corporate guarantor. Because of corporate guarantee, you have gone into this CRP. Then you should cooperate with the main resolution professional, and where approval is granted by the committee of the corporate debtor as a corporate guarantor permitting the transfer. So you should place that request and everything with the COC, and COC should approve it. Then the resolution professional of such corporate debtor shall ensure that the proposed transfer is appropriately disclosed in the IM. So in your IM also you should say that. Then we'll go to next one.
In that case, one question. If I am a RP of a corporate guarantor, CD,
right.
In that case, my IM should also say that my assets has been taken over by the
will be
CD of
considered in
the
that plan.
No. So in the plan of our main company,
main CD, right? Main CD.
So my CRP, how I will done when the assets has been taken, my CRP, how it will be done when there is no asset, because all the asset has been taken by the RP of the main CD. Suppose my assets is also covered under the main plan.
In fact, what you said is right, sir. Because in that case, there is no CRP for this. Entire thing will be done by the main.
No. Again. Sorry. Please. I think you're getting. Only those assets will be asked for which are relevant to the CRP of that company, not everything. Okay. So if the guarantor, corporate guarantor, CIRP, has got assets one of which includes an asset which is necessary for the CRP of the other borrower and not required for your CIRP, only that will get transferred. And that will be approved by your COC. They have to first, they have to agree. It is not done without that. So both parties, see, let's say party A is the one undergoing CRP, which has got a land and a construction project. Now that land belongs to another company, which has also gone into CRP, but it has got other lands. So this one, it can give, no, its COC can say, what will they do with the land? Because there is a building that doesn't belong to them. The development rights have already been transferred. So this is a matter of give and take. It's a commercial process. It is not a legal enforcement. These are enabling provisions where both parties have to come to a conclusion that doing this is better for both of us. Not doing it is harmful for both.
So here the decision is taken once the commercial understanding is finalized. When the plan comes in, the plan provides a treatment for land is value so much and so and so. The entire decision of voting is only by COC, right? There's that individual creator who has
by the COC, yes.
By the COC, right?
In this case, the section also talks about the person pulling in the asset has to give a value to it.
Yes.
Okay. Now, when the plan comes, because this is not the asset of the CD, remember that the voting by the COC, even though it is brought in, is it pooled in the sense that it loses its identity? Probably not. That's not what the wording says. It doesn't imply that. So
no, sir, assets are not transferred to the main CD. It's only both are considered in the same CRP.
They are being brought in. It's like a bundle. There is A and there is B. It is just a packaging together, but ownership remains separate. So whether the other creditors in that, can they decide on this asset? Probably not. It doesn't look like that. The wordings in the section and the regulation do not imply that. They indicate that the creditor who has brought in that asset has the final say on what is the value he is willing to accept.
Yeah. So
Sir,
once the value is finalized, you are saying that once the value is agreed upon.
No, value, the initial value given by the creditor is just notional. It is like, I want this much. But then the offer comes, say, you say my value is 100, I am putting this land. And the resolution applicant says, sorry, I can give you 75 max. You decide whether you want to accept it or not.
Yeah, that
Sir,
means COC is not the decision maker. I was just
On that,
curious.
it cannot be. It cannot. I mean, there is no cram down provided for this.
So if ultimately then both the COC will have to decide. Say one plant is there, the land belongs to the promoter, the bank is different. And if the plant and machinery belongs to the main COC, now you say that COC says 100. The main
No, see, when it is that COC is only approving the transfer but doesn't own the asset. These are cases where a particular creditor has a sole security interest. Okay. And it is not required for the resolution of that other guarantor CD. It is not required. That they have to come to that conclusion first. We don't require this. But whatever we get from there is good enough. Because anyway it is sole security. So it is not that as easy as it looks. It will be case dependent. It will be facts dependent. And
in fact, sir, recently I have seen one. Okay, I'm advising somebody. We applied for one UI against invitation for UI. Then after 15 days, no, because of this new amendment only, he said that the assets of this corporate debtor have been bundled with the other main corporate debtor, one more corporate debtor. So he withdrew this and asked us to file a plan in the company name was some Crystal Projects or something. It was. If it is in public domain, people can see it. So where this
sir, that means if I am holding the property or I am holding the security of the land, I can say that I can give it provided I get minimum 100. Now, if the COC of the CD wants that, they will take it at 100 and say in their memorandum minimum 100.
No. The COC will not decide what value to take. It will just assign a value for the sake of IM. Okay.
IM or
see,
otherwise it will go back forth.
No, it can. No, why? See, again, we are thinking of all the 100 problems that will happen. That is not the point. The point is, can you solve 2 more than what you are doing now? It is a better situation. That's it. Let's not get into the perfect world. This is not a perfect world. Insolvency, by definition, is imperfect. So, this is an enabling provision. काम आता है, करो. अच्छा नहीं लगता है, छोड़ो. There is no, it is not mandated. Okay. Let us not look at all the things that can go wrong. Let us look at all the things that can go right.
So the question, I think, for clarification, sir, again, there's a creditor who has a sole possession. He has agreed to give it as part of the bundling. He is very much there. The plan comes in. Taking into treatment this particular underneath land as well as a structure. COC is sitting. Now, this particular creditor is also part of the same COC anyway, because that's how it is.
Yes.
So he is also sitting there. Now, therefore, it's a mutual discussion then and there at that point of time only, whether they're agreeing or not agreeing.
Yes,
so
absolutely.
The question that I'm asking here is, in the event, the creditor who has given the asset, whose stake is minority, but it is his asset, and the majority of the COC, the remaining, who is within that COC, if there's a disconnect or dispute in terms of the value, then 66% condition is, will it be applicable or they have to go to NCLT?
Probably not. I mean, I am not saying with 100% confidence because one can never, prejudge what judiciary will determine it to be. But the language as it exists requires that this is being brought in with consent, and it cannot. There is no cram down provision once it is. Just because it is.
Fantastic.
Thank
you.
We'll go to the next one, sir. Next amendment is the 30A, withdrawal of application. Now, this has been majorly affected this one. So we need to go through it carefully. An application for withdrawal under Section 12A shall be made to the adjudicating authority by the resolution professional within 3 days of approval of the committee of creditors in such form as notified by the board through a circular, shall be accompanied with a bank guarantee or a demand draft. First thing is that now the 12A will, as earlier we had a 12A format which was signed by the person who was willing to settle. That is, the creditor was signing the 12A. Now the 12A form is not signed by him, it's signed by the IRP, RP only, while as a format submitting to the NCLT. One. Earlier, there was only bank guarantee provision. Now we have a bank guarantee or demand draft also, which can be given towards the estimated expenses incurred for the purposes of clause A, AA, AB, AC, all that. Okay, all those expenses. Because the guarantee was giving a problem because uh, so that's why what most of us used to do is that we settle the RP fees and get an NOC instead of getting into this bank guarantee. Because in one of my cases, I got a bank guarantee, sincerely bank guarantee in favor of the RP. Now, NCLT came back and said that why do you take the bank guarantee in the name of RP? I said RP is the beneficiary, he has to get the money. No, you should take it in the name of registrar NCLT. So then we have to change it. Then finally we have to pay him. So ultimately we end up taking 2, 3 bank guarantees and all that. Can be a big nuisance. Now anyway, this is clear that we can take a demand draft or a bank guarantee. Ideally, so demand draft also can be done. But it doesn't speak of NOC. I don't know why, but no, the normal practice we have is the NOC concept practice only. And the next is the provide that such application shall not be made before constitution. Now this is the major thing. Earlier, the operation creditors basically, normally 19% cases of 12A are with the operation creditors only. They used to file a case, expect the payment immediately on admission, before admission ideally, or immediately on admission, because so that this problem is not there. The CD doesn't go into the RP, CIRP and all that. But now that is all done away with. The first of 12A can be filed only after formation of COC. So even if the creditor and debtor are creditor is willing to pay also, he has to wait for the first 30 days, then form a COC. Then we need to see how many of them are willing, how many creditors are there. If you pay only one creditor, then what happens to the fate of other creditors? So all that will be considered by the COC, and it can't be done after the issuance of invitation for expression of interest. So you have only minimum, you have about 30-40 days period within which you should be able to do it. Now, I don't know whether Mr. Ravi Prakash Ganti only should tell us whether this will stand scrutiny of the legal system, because when the creditor is willing, why should he wait for 30 days for that formation of COC and all that? But IBC has done this.
No. This is there in the Act itself. This is not regulation. The
Right.
regulation
Act also
unnecessarily
says,
is
Act also is amended,
reproducing.
right?
Yeah, the unnecessarily the regulation is amending, incorporating provisions of the Act, which is not meant to, because it can cause confusion. Okay. The Act is coming out of the Byju's case.
Right.
Okay. Where basically right from the inception, 12A was meant to be without any condition a settlement between creditor and A. But because it was being misused, so over a period of time, what is the thinking that has developed in the system as a whole is that the moment it is admitted, it is no longer a proceeding in personam, it has become in rem. That concept cannot be done away with. So till admission between you two, creditor, applicant creditor and CD, no problem. Do whatever you want. Once it is admitted and it is recognized as a proceeding in rem, then the processes following it, including withdrawal, also have to be like in rem. Hence, the provision came that the COC as a whole shall decide about 12A. It cannot be, because there is one classic case I will tell you, which I am quoting it. Siska LED, Mumbai. I think 8th or 9th application is going on. Each time they settle with one party. Now the NCLT got fed up finally and said, no, nothing doing, no settlement allowed. We will hear everybody. And now the CIRP is proceeding. So these are the things that are being addressed, the problems, actual problems faced on the ground through this amendment of the Act and the regulation. So yes, 30 days for the formation. is must, it is a desirable thing. Because in our situation, let us see, 14 days is only on paper. It's usually minimum is 14 weeks. Most of the time it is 14 months, right? That was enough time to do settlement with the creditor, no? You take away all that time, you let it go to admission, and then you say, now I want to settle. No. This provision make, you see, settlements will be faster now. Everybody will ensure that they do it before the admission itself. Whoever wants to settle. The admission rate also will go up in NCLT. So this is a good amendment.
Okay. So the second sub-regulation is there.
But that's a regulation 2. When you come to that, lot of problems in that. It's a bad regulation.
Where the application approved by the adjudicating authority, the person furnishing the bank guarantee or demand draft under sub-regulation 1 shall deposit the amount towards the actual expense. So after taking DD, you have to again deposit money a second time. So I'll pay money for the DD, say 10 lakhs, and again pay. Then I take back my DD. Till the date of, okay, then, and incurred for the purpose referred in sub-regulation 1 till the date of approval of adjudicating authority. Normally, we used to get money only till the date of filing of Form FA. Now we'll get money, RP will get money till the date of approval by the adjudicating authority as determined by the resolution professional. So RP is the authority in this case within 3 days of such approval to the bank account of the corporate debtor, failing which it is going to the account of corporate debtor, failing which the bank guarantee furnished shall be invoked or demand draft shall be encashed without prejudice to any of the, sir, this is a complicated section, Mr. Ravi sir, you wanted to explain.
Yes, this is unfortunately.
I think I can see
the
so
same
many
problems
in
that
this.
was there in the original that you
I can see
furnished.
so many problems in this.
Yeah, the bank guarantee should be in the name of the CD. The moment the order is admitted, it says hand over the control immediately to the existing management. Once you hand over control, how do you get the money out? So ये problem है. So this has to be tackled on the ground, and like most of us we do, you first pay me, then only I will give my NOC. Don't hand over till you get the money. Simple.
No, but sir, why did they not put the NOC concept into this at all? Then ideally
if
they
I
could put
don't hand
NOC.
over, IBBI will come up with a decision.
Right, that's a problem.
We have, but that's a call you have to take at that time. So ideally, when you are making the application, now whenever, again, when there is a problem with the law as it stands, it is the judiciary that can help you. So in your IA, when you file, you put a prayer that so-and-so amount should be given to you directly by way of DD.
Sir,
Prayer mein dal do. So you circumvent this because NCLT can issue the order. You make so much payment to him.
Sir, I had a case like this. Okay, Mr. Harish also knows that case. See, where the same problem. It was NCLT directed him to pay me. Then said, okay, I'm relieved. Now he didn't pay me. The promoter didn't pay me. Then I had to file one more IA. Sir, he didn't comply with that. After 2-3 years, I filed a contempt. Then NCLT said that NCLT doesn't have right for contempt proceedings at that time. This is in the beginning, 2018 only. Then I had to go to NCLAT. NCLAT said NCLTs have a jurisdiction of contempt. Then we filed it. He didn't come back. Then we had to file a police complaint. After 6 years, 7 years, and after taking initially, I was only attending the NCLT hearings and all that. That's okay. But when it became a contempt and all this complicated thing, I had to hire an advocate fees. So with all that, after 7-8 years, I got that money.
Now, there was a comment I heard in one of the benches that bad debts are there in every profession.
Sir, bad debt is when he doesn't pay. But
Yeah,
bad debt is not when NCLT orders.
This was a
No, in
comment
fact,
made to similar situation RP, who said, I am not getting my fees. He said, write it off.
Sir, in fact, in this case, was my case only. When in this case, I had an NCLT order. That NCLT order, NCLT judge only was saying that.
I don't
Now
want to
order is there, you
elaborate
go for
what I
civil
said
court.
further. This was from the bench who said,
Right.
yeah, hota hai, kya kare? Order was there. Order was not enforced. Order was not executed. Contempt was not allowed because they say such things, contempt cannot be, jurisdiction cannot be invoked. Hota hai. You win some, you lose some.
Okay. At least our bench, I was lucky that way.
Yeah.
Because otherwise, the judge was saying, file a civil suit. You have not done, no, go for civil suit, he said.
Yes, yes, that is also true. That also people say. In a way,
But
yeah, see, that is why
understood.
everything
Yeah,
law cannot aid you. Let us be clear. We are all senior 50 plus minimum, 20, 25 years of experience. We have to protect ourselves. We have to learn to protect ourselves to the extent possible. And once in a while, we will suffer. There is nothing new. I mean, if you are practicing as a chartered accountant, also there are clients who don't pay your fees. What do you do?
that is true.
Same thing here. Just because the appointment letter or order came from a court doesn't mean the court, like parents, will take care of everything that we have to do. No, it doesn't.
Okay, sir. So next is the details of, okay, now this is again IM. I think this is a part of the IM, I think. 36 information memorandum. In the information memorandum, they have added this particular item saying the details of any asset of a personal guarantor or a corporate guarantor proposed to be transferred under Section 28A. So we should include this particular thing also in the IM.
So can I say, I think either I have taken Ganti sir's help also. So I just thought I will bring to the notice of everyone. Right now, there's a case before NCLAT now, whether 30A provisions here, what is given, is it in contravention to the 12A Act? So Ganti sir, that's already there. Whether that should have been a 36B or 36A, it is before the NCLAT now. The wordings that are used in 30A, can you go back to 30A provision, sir? So that members, I think this was pointed out. 30A.
Okay.
Yeah, here if you see here, it says that proviso clause after the issue of expression of interest under regulation 36A. 36A is expression of interest stage. Whereas the regulations does not say, act is not clear whether it is at a stage, but rather it can be interpreted in the act that it is at the stage of 36B. Both are of material interest because the number of days varies from the date of insolvency.
1 second, sir. What is regulation 36A is? What is 36B?
36A is expression of interest rate, 36B is RFRP.
Invitation for resolution plan, RFRP, what we commonly call
Right.
as
36 says invitation for expression of interest. This is Form G.
Yes, but you go back to the act. See, the regulation cannot be different from the act. It can only
Right.
tell how it is to be implemented. If you go to the act, it says what? After the first invitation for resolution. It doesn't say expression of interest.
1 second,
Okay.
sir. You are talking of 12A, no?
Not 12A. We are talking of 12A. Yeah.
12A, 12A, 12A.
12A, 12A. Correct. Amended 12A.
Okay.
Sir, Ganti sir, this was the reason, sorry, because this was an important one. We had long
No, this part
conversations
is
on this.
okay. We are coming there.
No, the reason is the appellant there were approached because he feared that he will get justice.
Let's not get into case.
No, on the honorable NCLAT, sir. No, I'm not getting the case, sir. So on their hearing right now this matter, I'm saying.
So this is the 12A section.
The subject is 12A. If you see the 2B.
2B after the invitation.
First
for
invitation
submission of
of
resolution
submission
plan.
of a resolution plan has been issued by the RP. Now, when do
Okay,
you
sir.
give an invitation to submit a plan? After you drop your list of PRS and the final list.
Right.
Not before.
Not
Till
at the
that
Form
time,
G
your
stage.
expression of interest to submit a plan and invitation to submit a plan come from two different sides. The expression of interest is submitted by the prospective applicant, resolution applicant. The invitation is issued by the RP. Okay. Form G is for invitation for submission of the expression of interest, because that is a preliminary stage. It is a sorting out. Are you eligible, not eligible? All those things are done at there. No one is asked to submit a plan. You have to separately ask for it at a subsequent stage, which is 36B. Okay.
True.
So the act says, I mean, the wording of the act implies 36B. But the wording of the regulation is saying 36A. So this is the conflict.
That is true. That's a problem.
Yeah, it is a problem.
Okay, sir. So we'll go to the next one where we are 64. Okay, sir. These are the two things. This is coming a part of approval for resolution plan. So now the act requires that every approval should be a two-stage approval. Okay, 31(1) refers to a two-stage approval now. First is the stage where you approve the plan, and the stage 2 is the approval of distribution. So the act now provides, act is not provides a it's a mandates now. Every plan, we should, when we are putting it for voting, we should put for two resolutions. One is for approval of the plan, one is for approval of the distribution. If the plan is approved, distribution is not approved, you can still go ahead with the this one. But normally banks, if you have banks in the COC, they'll definitely say, let me know what I get. So first you decide the distribution. If you say I'll get 100 rupees, I'll go to my sanctioning authority for getting approval for 100 rupees. Or if I get 200, 200 like that. Now they don't say that first approve plan, but this also again, as I said, is an enabling provision. If the COC, all the members agree that a particular distribution mechanism, first they have to agree the distribution mechanism, then also the plan. But it will be these things. And this also requires that we have to file a particular form for this. So 1 second. I think I have mentioned that form also here. No, I didn't. I will anyway. That we'll see in the forms. There's a form also specifically for this.
Can you go back to the section which talks of this? I don't
31(1).
think it is mandatory. If what I recall is it is optional.
No, sir, it's mandatory, sir.
No, let's go to, let's see that section.
Thirty-one one. Provided that
May is not mandatory. May is
no, sir,
optional.
provided that the adjudicate may on an application made by
that
the
means
resolution
first you have to ask
professional
for that application, which means that the COC has
with
to
the
first
approval of committee
prove
by
that
vote
our
of not
distribution
presence.
is still in conflict. That can be because of intercreditor.
True, sir, but for adjudicating authority, it is may. I think for RP, you should provide.
No, it is not. It is not. See, if you have a plan where everything is done, that is always the first option. It is not that you will have the distribution separately and people can vote on a plan without knowing distribution. No. Here, you must understand the genesis of every amendment. Here, these amendments were because intercreditor disputes were
right.
Obstructing the implementation of the plan where everybody was okay with the total number. They were only not okay with that sharing between themselves. Okay. So this is said, okay, you dispute whatever, let the plan start getting implemented. Which means those who are disputing the sharing also have to obviously agree for the plan to be implemented. Okay. COC has to approve the plan. They will not approve the
One
plan.
second, sir. Let me show the format. I think this is the application for form GA. Is the form. They have prescribed separate forms also for this.
Yes. Only when you want it. It is not mandatory. It is meant to be an exception, not the norm. Ideally, plan should be complete, done fully, everything. But in case it cannot be for disputes between creditors, then two-stage approval is now provided. So it is.
No, so but is it recommended? Ideally, it's recommended for an RP to take
No,
two resolutions, go there, because
no.
tomorrow suppose NCLT says something,
No.
or later on suppose both the
Do
creditors
not
start
make
disputing.
assumptions about
No, sir,
NCLT.
it is not like that. This is optional.
Yeah, it is optional, 100%. Okay.
Sir, give me an example. Supposing I don't do it, tomorrow there is a disputing creditors. Then where do I go then?
No. See, if there is a dispute in creditor, they are not going to vote for the plan.
No, but all the existing disputes are
A
because of that only, sir.
dispute, a creditor shows dispute through voting. Okay.
Right?
So if the distribution mechanism, first of all, there is a misconception that distribution is to be provided by the RA. That is wrong.
That's wrong. That's true.
Distribution has to be as per law. RA can only propose.
True.
Okay, RS may be accepted by the COC, may not be. They might do a redistribution. As long as the total burden on the RA doesn't change, the RA has no locus to decide that. Okay.
Right.
Now, in that distribution, well, let us say assume as proposed in a plan. If one of the creditors or more do not agree with the distribution because of some dispute, it has to be some dispute, no, between them.
Right.
Then they will say, no, okay, overall we are agreeing, this dispute we are not agreeing. So we will vote for the plan, but we want it to be a two-stage process. We want it. Let the distribution be settled subsequently. Okay, they can. Maybe they will file an IA for that. I mean, I can give you an example. Let us say first charge, second charge.
Right.
Now, if the distribution is such, second charge holder will say, sorry, I need to get proportionate because the law is like whatever it is. Overall, I am okay because by voting against it, they are not going to gain anything. They might get, the lower of the liquidation value. So they would like to vote for so that they get the higher, whichever is higher, but still leave the distribution adjudication to the NCLT, which is fine. Basically saying broadly we are agreeing, one issue we are not agreeing, we will leave it to NCLT. Okay, so it is not, RP is not supposed to even talk of two-stage process. It is not RP's domain, it is COC domain if they want it.
Yes, sir, then tell me one thing. Supposing today you are seeing some disputes for the inter-creditor disputes in the various courts, okay?
Seeing doesn't matter.
No, sir, let me tell you, sir. So in those cases, had they taken this kind of a resolution on day one itself, then they would have been avoided.
No, see, the enabling provision has come now.
Right. No, that's what I'm saying. So at least
now
going
when the
forward,
COC looks at plans and finds that there are disputes, they will come to that conclusion, okay, let us do a two-step process. They have to decide. RP has no role except filling up the form and filing it. Okay.
I think still, sir, I feel that RP should propose two-stage so that it is settled at this stage
RP
only.
is getting into the commercial wisdom when he proposes two-stage.
No.
The moment you do that, you are entering the domain of the COC.
We are proposing, decided decision is theirs. We're only proposing.
You can propose amendment to the constitution in a COC meeting. No. You propose only that which you are supposed to. Two-stage process is only if there is a dispute. Why are you assuming there is a dispute?
No, we are preventing a dispute by deciding resolving today itself.
No. You can't say that you might get cancer, so let us start taking cancer medicine. No. You let the discussion happen. Let there be a semblance of a dispute coming. No. If people are happy with the plan, why do you want a two-stage thing?
One second, sir. Let me again see the form GCA, this GA only.
Don't look at the form. The form is a subsidiary. It is not
that's okay, sir. But details of committee creditors approval, date of COC meeting, which resolution was a plan was approved, voting person and all that. Reasons for
seeking two-stage approval. Reasons. Who gives the reasons? COC. I mean, RP is only the mouthpiece of the COC in this, not the decision maker.
At least in the meeting, as an RP, I should say that there's a provision for two.
No, you say nothing. They are supposed to know. Okay. Casually, you can mention. Don't try to become legal advisor of the COC. They are much bigger than us with much more resources. And everything that is there goes through 5 layers in their institutions, not one.
To most, what RP can do is that if he finds that there is a discussion on the distribution, he may apprise about the amendment. He should not even propose it or whatever. Leave it to the COC to decide. You can only bring it to the notice that this is the amendment. Think about it.
Yes,
that's it. What you can do.
Absolutely. I mean, in case they appear not to be aware of it, which they ought not to be, but let us say sometimes if they are private financial creditors, they might not be.
Yeah, in small companies, somewhere yes. this happens.
MSME type, when individuals are involved, it might be.
Okay, sir. So that's one. Then the next amendment is regarding in case of multiple resolution plans. Now the code also permits Suppose say CD has different kinds of assets, there can be multiple resolution plans, but at least one of the resolution plans should be for a company as a going concern. So that is what the requirement. So now if the company has different kinds of assets or different locations, then you can have a multiple resolution plans. But what required is that at least one should be a this one as a going concern. And the next amendment is the now earlier we had to file the application to NCLT before 15 days
No,
before the
1 second, sir. 1 second. So can
Okay.
you please go ahead, sir, for clarification? You're saying multiple resolution plans, which could be from different parties. One will be for a going concern. So in all other cases, it is essentially a business transfer or a asset transfer. Is that what you're referring to in the plan?
That is true. That is true.
So in all this shareholding, share transfer, nothing is there. So,
That
but can we have a plan? Suppose there are multiple assets. I didn't get completely a going concern plan, but I got a plan only for certain assets initially in the first round of issuance of Form G. Can it be considered or it has to be done together only?
no.
See, the moment the regulation says at least one shall be a going concern, you cannot do asset sale and then left with a shell company. Ab main kya karu? Unless, of course, the COC can come to a conclusion that with all these assets, everything that is value in the company is actually being realized, and the shell company can be dissolved. You can go to a dissolution.
No,
But
No, that
COC
sir,
has
that
to
is
do
possible
that,
under sir, there's a regulation 29 or something, no, which permits that kind of a thing.
Yeah.
29, no?
Yeah,
Something is there.
I mean, all of them have conditions. You can't do everything. So
Right.
you can pool all of it and come to a scheme where assets are sold independently, maybe because there is no sense in the CD as a whole. Nobody wants it. It's a way. And then you dissolve the CD. Okay, make a plan like
Sir,
that. Make an application. NCLT has the power to do it.
sir, I
No.
have done that. I have done that in international case where all the assets were abroad. The buyer were not willing to buy the Indian company. They say, why should I buy an Indian company and then a subsidiary and then the third level subsidiary? So we sold the asset there, got the approval from NCLT, and now the company will be under dissolution.
Yes.
See, for example, in case of real estate companies also, sometimes it happens that some projects goes for a resolution plan, but rest of the companies are not under the resolution plan because nobody wants to take rest of the things because they're not interested. So that portion goes under the liquidation and then thereafter dissolution. Similarly, to facilitate the rest of the types of industry, this is the enabling provision.
So its only thing is we are saying here, because it used the word at least one plan, it need not be simultaneous. So it could be sequential also. That's all I'm saying.
Yeah, I mean, if you don't get it, again, which means there is a particular circumstance, you are left with a shell company which has no possibility, then that is where the judiciary comes in, gaps in the law. So you go to there with a proper resolution that I have these 4 plans for the 4 assets. Okay, let us say there are 4 real estate projects. Nobody wants the company because there might be hidden liabilities. Nobody wants to touch it. It is very possible, real estate may. So you sell the 4 projects. I mean, you have proposals to sell. You go to NCLT and say, I want to sell this by demerger separately. And the remaining shell company, we want to propose for dissolution, direct. Perfectly allowed. Because with the current amendment, you fall into that category, no asset left, and direct dissolution is allowed.
Correct.
So the next one is the 30 days before. See, earlier we have 15 days time before the last date when we should submit our plan. Now you can file before 30 days. That means actually CRP period is less, but more time for filing the applications. Less time to file the applications.
Ravi sir, may I?
Tell me, sir.
Thank you, sir. So, Ganti sir just mentioned, let's say there are 4 projects, real estate thing, and there could be some hidden liability. Now, what happens is there are buyer for those 4 projects. Fair enough. A, B, C, D goes to some different companies, and the shell companies left. but it will not be a shell company, sir, because in your own suggestion, there could be hidden liabilities. Tomorrow, who will be the parent of those hidden liabilities? So that shell company, in case it is put into automatic dissolution by way of an NCLT order, then what will be the fate of those hidden liabilities? And tomorrow, if they crop up, it could be some PF, it could be
Okay,
anything
then.
for that matter.
Yeah. Understood. Understood.
Yeah.
If when I say hidden liabilities, I'm talking of those liabilities which are where people don't want to file the claim for that type of hidden liability, not necessarily financial liabilities. Okay, non-financial obligations भी होते हैं, which might be there if the claims have not come to you as on that day. Say, let us go, say it goes to liquidation. I mean, you have two-step process. You can go liquidation and dissolution or direct dissolution, depending on circumstances and depending on what the NCLT finally agrees to. It might not agree direct dissolution. It might say, okay, go for a liquidation first. But today, what is the status? With all the amendments, that the claims in the CIRP are taken to be final until somebody wants to file during liquidation. So if there are some things which are not there on paper, okay, these are claims which are not received. So those claims which are not received, you cannot make an assumption that there will be something. You have to close the company, right? Those who have to file the claim, they can. So even after dissolution or strike off, the law allows the company to be revived under certain circumstances. So we should not be worrying too much about that. We propose. It is up to COC and finally NCLT to decide कि करना क्या.
So now we come to the next amendment, which is the dissolution of corporate debtor during CRP process. In fact, sir, this I have done in the beginning of my first or second, third case only, by under Rule 11 and 60 subsection 5 kind of a thing only, because there was nothing in the company and nobody was willing to bear the paper advertisement also during liquidation. So we have done it, but under, as I said, I think this was said by him also, Mr. Ganti sir also earlier. All these amendments have come because of some experience here and there, and then they brought into this. So here again, the dissolution directly from the problem actually came up because even when I was filing that, the discussion was that the application for dissolution can be done only by liquidator. That was the provision earlier. So now they are amending it, they are enabling it to so that RP can also file for dissolution. Because if you see the earlier regulation, it says that only liquidator can only file for dissolution, not the RP. So to avoid that, under certain circumstances where we can prove that we are not able to, we don't have money even to meet the CRP process or likely liquidation costs, and we are not capable of being effectively realized. So in those circumstances, we can file for direct dissolution by the RP can directly file for dissolution. So then the next is the restoration of the corporate insolvency resolution process. So this also I have done in one of my cases actually, where Mr. Harish also was party in that. What happened is that the COC decided that, okay, now we'll not get any more plans, so we'll go for liquidation. So I filed a liquidation application also. But after some time, somebody came to, promoter could get somebody to buy, file a plan for that. Then again, I approached NCLT saying that before the order was passed only, I filed a memo for withdrawal of my previous application and then did the one more application reviving the whole CRP process. So then it was again continued. We got the plan and everything. That was a different issue. So this was also done by me earlier, but anyway, it is clarified that the resolution professional shall continue to discharge his responsibility. That is okay, but it should be the application should be made before the order for liquidation is passed. Once the liquidation is passed, then it's the natural death only. There is no other way now. So these are the main things. Now, when actually I was preparing for this, I was trying to get the amendments as on 2nd June because that was what recently uploaded. Then I found that there's one set of regulations that were missed in this because these amendments they came on 9th June. So this also is now part of the amendment in the CRP regulation. Basically, there are three in this. One is assistance to committee, where the 16E is the new amendment. This amendment speaks of where the scheduled banks and public financial institutions are less than or not more than or less than 66%. Actually, the sentence is some complicated sentence. where creditors other than scheduled bank or public financial institutions hold more than 66%. That means banks and financial institutions are less than 66%. Then you should have a 5 operation creditors as invitees in the meeting, out of which at least 3 should be the statutory authorities. So you should come, bring them, call for the meeting. They'll be observers. And if they observe something, then you should record their objections in the minutes of the meeting. Okay, they don't have a voting power, but they have a right to talk. And their discussions also should be part of the minutes in the minuted in the meeting. That's one. Then next is the approval of committee of for insolvency resolution process costs. See, all the insolvency process costs incurred by the RP, IRP rather, not RP, IRP in the first month should be put up in the first meeting for the. Now, earlier our understanding was that RP is controlled by COC, liquidator is guided by SCC, but IRP stage where you don't have any boss. So you can do everything. Suppose the insurance has to be paid, you have to pay. Something security guard has to put, you have to put. For some, most of the decisions that we take in the first month, we don't take anybody's approval. But ideally, the normal practice for all of us also was to put all that expenses in the first meeting and get it ratified. But anyway, now it has come as a part of this. Then second is the estimated. Then we have to prepare a going concern assessment report. Now I have done in most of my cases where there was a going concern is possible, saying that okay, if you run the company, you'll get a cash loss of so much, you get a PAT loss of so much, or whatever it is. Those things we were saying in the meeting, but now we have to make it like a formal going concern assessment report. Now, how do we do it is an issue because certain things, suppose it's the hotel industry, there may be some technical inputs required. Some other industry, some technological industry or software, some any other matter for that. Even if mechanical engineering industry, we don't know the demand supply can obviously demand is less. The production capacity is more, whatever it is. So that's why this company has gone into this process, but it's difficult. Even I don't know, Ravi Prakash sir, if you can tell me something about how to prepare a going concern assessment report for a normal company, I can do, I have done it. But for insolvent company, how do you do it? Actually, we definitely will have a cash balance gap also. So maybe we may end up putting up a note for interim finance only if you prepare a going concern assessment report also. Then we also have after the first meeting, and this also has to be done in the first meeting, no? No.
Sir, one second, sir. Devarkonda sir.
Tell me.
So you are saying that if you become an RP and the company is actually a running company.
Right.
This is essentially for insolvency cost, right? Resolution professional cost, right? Process cost, right? So when you take a running company, you have an existing manpower over there. You have an existing team will be there. And anyhow, you have an opportunity. If someone is not there, you can hire that person for that role who actually presents the basic operating cash flows at this stage, shortfall, what is there. And because there is no interest there, whether there are surpluses that comes in, what is the gap? It comes from the team itself. RP takes that as a reference point and he does his own assessment. If he doubts, if he has self-doubt about any of the numbers being given, he can hire a professional along with him and prepare the report. Unless you are entering into an RP is entering into a domain where he has no understanding about the domain, he can take experts along with him in part of it. But it is not something very detailed because there are existing cash flows over the last 6, 8 months, 12 months, which tells you what the revenue you are getting, what are the costs you are incurring, manpower. So that is exactly what you're going to do in this.
So all that I've been doing in every RP, CRP process, we are doing it. But then we never put a heading called going concern assessment report. So you mean to say the same thing, we'll put a heading, going concern assessment report and submit.
Yeah, essentially now, see, you are doing it because you are sincere in doing it.
We have been doing it because essentially it was always running in cash losses and ending up in a, what do you mean, interim finance situation.
No, there could be situations. What I'm saying is, this is correct, but there are cases where when you don't pay all the because of moratorium certain costs, okay, there could be surpluses, forget losses. Because the moment you don't pay anything, there's surplus also. So this is essentially putting it on record and everything, where RP, whatever he understands from the business over there, with the help of experts and the team itself. And that has to be presented before the COC. Anyway, sir, Ganti sir wants to say something.
Yeah. Okay, let me clarify this. This is a standard run or close situation. which is what is now to be assessed because nobody else is there. So just because you have a negative cash flow doesn't mean that you stop running the company. Interim finance might be better because it will not only probably preserve the value, it will enhance the value. Okay. The second is a negative cash, rather a cash loss situation. Question is how much, for how long, and if you close, what is the cost? That might be much higher. Okay, termination cost, etc. Now, what is expected here? Don't get carried away by the first meeting. Don't get. It's a guideline. Okay, as far as possible. It is a best effort guideline. It cannot ever be that if you don't do it, you face the death penalty. No. Whatever you can do till the first meeting, do it, and then seek time. Call another meeting within 15 days with a better report, another 60 days. Heavens are not going to fall. And this is a running company, if it is. Then there are, as Ganesh said, there will be people who are keeping track of all these things. Get whatever it is. Your first report doesn't have to be the Holy Bible. No, it doesn't. It can be a working draft. Okay. So no need to get, you have to present something. And that something could also say, I don't have sufficient information as of now. I will do it in the next meeting, which I propose to call within 2 weeks, 3 weeks. Bolo. Okay. That's good enough. Record.
That's true. So then second, subregulation 4 is another problem. Not subregulation 4. Subregulation 4 only. After the first meeting of the committee of creditors, that means at the IRP stage, you are incurring money and putting for ratification. And after the first meeting of the committee of creditors, all insolvency resolution process costs shall be incurred only with the prior approval of the committee. So there, if you have to give a paper advertisement for public announcement or not public announcement, rather Form G kind of a thing, or any expense for that matter, has to be with the prior approval of the committee. Now, that may be difficult for every RP because, again, even if you put up something for the meeting, they'll immediately say, I have to go back to our head office and get approvals and all that. Ideally, if
How
there
is
is a
that a
budget.
problem? How is that a problem? Your problem is in execution, but you're not liable if you don't have approval, no?
No, you have to publish the Form G within so and
No,
so
that is
date.
the thing that the committee is aware of it. If the committee delays it, somebody else is preventing you from doing your duty. How are you liable?
No, in that case, what should we do then? We don't issue the invitation?
No,
Or
obviously.
we don't pay insurance. Suppose we have to pay insurance, we have to pay security guard. So these kind of things. So
Or you can
ideally,
plan
what I
ahead.
thought was that, sir, what I
Those
thought
which
is,
are of recurring nature expenses are known at the time of the first meeting.
so we should take a budget
So once
approval
you
for
take an approval, it is for every month. Every time you don't have to take.
So right, that's what exactly I was going to say. That prior
That
approval,
is normal. That is, see, recurring
we
expenses
take a
approval.
budget approval and then go ahead. That's it. What I want to say.
No, it is not a budget approval. Budget approval is different. You say, I will incur 20,000 per month for security expenses. That's not budgetary. That is final approval. Budgetary is around this much for this. Budgetary approvals are usually for operating expenses, where you cannot predict in advance, but not for fixed expenses. The word fixed expenses means you know beforehand how much it is going to be. Okay. So fixed expenses, you take one-time approval. Operating expenses, which might change with time, budgetary approval followed by a ratification.
Right.
So only other thing, sir, is for example, because the decision-making timeline is probably say 5 days, for example, and if you have to issue something in say X number of days, if we can plan -5 days for our meeting, that also helps in the process. And as you said, budgetary approval, once we know the expense, it's reasonably certain what it is, we can go ahead with it. Or you can ratify later on.
Generally, there will not be a problem. Problems mostly are in our mind, but sometimes there can be. But if your COC is not going to ratify, suppose, let us say emergency expenditure, which you don't know. You have to, some fire happened. You have to, call fire tenders, pay them. Emergency, get it ratified. Which COC will be not
Sir, I was only objecting to the word prior here.
prior.
Had they said with the approval of the committee, that's okay. Approval includes
No,
ratification. That would have been
prior
simple.
approval is correct because that is the guideline. That does not mean there are no exceptions. There are exceptions to the constitution, and this is only regulation. So there will be. No, we should not have the fear psychosis while doing our job. If I do like this, what will happen? If I do like that, what will happen? We can't do that, no?
Ravishankar ji, good morning, sir. I
Morning.
joined just now. I didn't realize that this is going on. See,
Correct.
this prior approval has been introduced now in the liquidation also. So now what I am doing is that with respect to prior approval, where I feel that it's urgent, and anyway, as you rightly said, if you put it to the creditors, they will say 1 week, 10 days, 15 days, it goes on for voting. So what I do is I send a mail to them with the comparative chart and all that. Accordingly, with the L1, I'll be going ahead in the interest of time, and this will be recorded in the next meeting. I don't even say ratified; it will be recorded in the next meeting. And also, what I do, if there is any one person, 1 or 2 bankers with the highest voting, I tell them, please send me a mail saying that this is fine, so that I will go ahead. I don't want to waste time. And it is working beautifully, sir. This is the practice I am talking about.
That's true. That's true,
Thank
madam.
you.
We always
Thank
take
you.
the concurrence of majority bankers and then
Yes, yes.
ahead.
At least by mail, so that somewhere in writing it is there that we have brought it to the knowledge of the creditors. Copy to all the creditors, and
Right.
then 1 or 2, if they reply immediately, some 1 or 2 will reply. Only some will say that we have to get approval, but some will immediately reply. Based on that, I am able to proceed, sir. Just for information. Thank you.
Right. So the next subregulation 5, the next is the regulation 39, subregulation 3. When a plan is getting approved, the following clause shall be substituted, namely we should record the deliberations and rationale on the feasibility and viability of each resolution plan, the expected realizable value and the creditors in comparison with the fair value and liquidation value, the adequacy of market discovery. So all the steps taken and the amount to each person. Everything should be recorded in the at the time of approving a plan. So that is what this last regulation says, amendment says, and this has come in 9th June, whereas others were in 2nd June amendment. In addition to that, earlier we had all the formats given in the this one itself, a regulation itself. Now the formats have gone to a separate circular. Basically, the most of the forms are same. We have a public announcement form. We have a written consent to act as RP. With written consent to act as AR. Then there's a format of a list of assets and records. This we'll discuss in detail. But all the other things, there's not much of change. Proof of claim and all that. And we have an application for withdrawal, this Form FA. What I was saying is that the Form FA, as earlier given by the creditor to us, and we were filing a normal IA. And whereas this Form FA is the form which has been signed by the RP and submitted to the NCLT at the time of Section 12A application. Similarly, there is a application for two-stage approval. So when the COC approves a two-stage, that means plan separately and distribution separately. That again we have to file a separate form called Form GA. Now first we'll go to the Form AC. I think we have another 10 minutes time. We'll finish this also fast. Form AB, this is Form AC. Form AC basically, it wants us to see what is happening in this 19.2 applications is that normally what I do is that I send a detailed list to what is required. Whatever I get, I get. Whatever I don't get, I file a 19.2 application. But for that, they formalized it in the sense that we write all this and what are the records and information given, what are assets given, what are the assets not handed over. These are 3 parts, and it has to be signed by 2 witnesses also. A person handing over IRP, RP, and that means the CD director, somebody should sign, and RP will sign, and witness 1, 2, with 2 witnesses will do this. Now, how this works out in future, because if a large company, there will be so many files and all that. That's we to make a list anyway. Similarly, assets also we should make a list. As per balance sheet, first we'll make a list. And what is not handed over also, we should make a list for the reasons why they are not being handed over. So, Mr. Ganti, sir, how practical this is? How that's what even unless we get into something, then
Forget
only
insolvency, let's say. Okay. Normal case, you come in as a newly appointed CEO. What do?
we don't make a list of all the documents there.
You don't. You take constructive position and you take an undertaking that everything that is to be handed over has been done so. And if anything is not handed over later on discovered, the person doing it is liable.
Right.
That is the only way you can protect yourself. You can't see, you can have a list for what is visible, the usual ones. But there are 20 locations, let us say. Are you going to go each place and put up a flag and put a board and say, now I have taken position? No. In all such cases, it is constructive or what you call juridical type of position. By handing over of a simple piece of paper, you are getting the custody. Okay. And you take along with that is an undertaking with that which say draft a document, everything IBB doesn't have to do, which say where the person handing over says, I have handed over everything which I had with me. And if anything is found later on, I will do it, and if etc. That's all you can do. You can't do. See, even if you take an entire list with if it is a large organization, it will take 6 months just to put an inventory. Then will you do CIRP? So ऐसा नहीं है. Let's not again get carried away by every word. Oh, what shall I do? See, we want to be recognized as CEOs. We should also think like CEOs. No CEO will ever think like this. अरे उधर का एक screw है, that is not in my list. No.
Anyway, that's one. So then we'll talk of next format is that amended forms only we are seeing, not
who
other
has to
forms.
sign, sir? The two witness also should be there, no?
Two witness also should be there. Two witness also should be there.
Okay.
That's true.
One from each side.
These are all the
One
same
from the
formats. Only form
giver side and one
FA.
from the taker
As I
side.
said, the form FA is a
I
form
think
now
there was a provision
signed by the RP.
There was some amendment which was brought in almost a year or 2 years ago with related to when you actually take a charge of the
Yes.
company, you enter into that Panchanama and witness and all that.
This is the same thing.
It is exactly more elaborated way.
Yes, yes. It is just elaborated in a form that was just a descriptive. Now there is a format.
This will also assist in valuation.
Yeah.
Because sometimes some assets get missed out and later on there is an issue raised.
Yes, yes.
Ravishankar, sir?
I think we lost him.
No, sir is there. Sir, I can see sir is there. I will call once.
So the first time we are crossing 9 actually. 9 a.m.
Sir, Ravishankar, sir? You got muted. Unmute yourself, sir.
Approved by the COC. So that's what we said anyway. After COC approval only, this will come to picture. Then we'd already discussed the form GA. GA is for an application for a two-stage approval, as we discussed. If the COC decides on a two-stage approval, then this has to be also be filed. Then others are compliance certificate. Compliance certificate, there are some changes because of the change in dates and to present for
So
the
this form says a
ideally.
separate
Okay, now we're
attachment
almost
or how it is?
9:20.
It is not part of regulation.
Sir, I couldn't hear you clearly, but now the forms they have put it a separate circular. Regulations as Act is code is separate, regulation is separate, and this one is forms are separate. That's how it is.
So actually now the forms are not part of regulations, so they can and part of circular. So some circular they can make changes as and when required. So it is easier for them.
Right.
One has to keep track of all the
So in
things.
fact, okay. No, sir. So
Yes, sir, continue.
Sir, actually, last week there was a meeting with IBB officials. So I requested them one thing, saying that like what you have in a Companies Act, you can see that Companies Act is there. If you click on a particular section, suppose appointment of director, if you click there, it will say what is the form to be filed, what is the restriction, what is the eligibility, kind of a thing, which you'll get it done. Of course, it may time.
Regarding
The
format,
IBVA
I will
itself,
just,
where
yeah.
election automatically take regulation 30A. That will automatically take was.
Regarding format, which is a compliance certificate filed by RP, there is one part of the compliance which has been missed out in the form, which has been introduced. That is the undertaking to be filed by RP with the special court. So even though it is not there in the form, so I suggest that it should be included in the format, because that is also a compliance required to be done by RP.
So what
I
is the
recently
special code, sir?
did,
What is the special code, sir? Satish, sir? Special code.
that if the assets of the company are attached by
No,
ED or
Okay.
under PMLA, then RP
PMLA.
is required to file an undertaking with the special court. So that is also a compliance by RP. That is not a part of format. In my recent case, I have been, even though it is not a part of the revised form, but it is suggested that there is no harm in including this particular undertaking has been filed and complied.
I think it is mandatory that we do all such things, even if there is not there in the form, because I think there's a recent judgment also on this. Just because the format doesn't give you that particular heading, doesn't mean any material information that you have, you will not place it. You can always insert a particular section and put the details on that.
But sir,
Yes, that's why I'm saying that I have we
it
should
automatically reminds us that you have to put
we
it.
may include,
So,
yes, right, because that is a compliance already done by us. Yes.
if there is no other question, then I can conclude my presentation. But anything else, Mr. Ganti, sir, if you have.
We have 8 more minutes.
We have already crossed 9. We attempt to close by 9. So, yeah.
So we have covered all CIRP, sir. Only liquidation and PG is pending.
Ravishankar sir, one question. I think always, every time
Same.
with respect to an amendment, we have to go back to the original regulation and then see the amendment and then take a call. They have not given a very consolidated amended CIRP or liquidation regulations, I think, isn't it?
They have all
No,
published.
madam. No, madam. Now, no, in the IBBA portal, now you have a up to 9th February regulations are there. IBC code is not there. IBC code is not there, but regulations they have put consolidated ones in this portal.
All updated as of 9th.
Oh, consolidated now they have put
That's what I
it.
said. So,
They have put
so
it up
what?
to
That's what I said.
2nd June, I think, and 9th is
No,
separately.
no, 9th.
Ninth.
No, ninth also they have put it. When I was preparing for this, I started with second one, but yesterday or day for yesterday they put the ninth also. I couldn't. That's why I showed this ninth amendments.
Actually, day before yesterday, I printed 2nd June, and today you were telling me 9th June is there.
Don't print. Digital, Rao. Be digital.
But I was looking at it. I could not get the consolidated amended
It is there. It
CIRP.
is there. Right now,
It's
it is
there.
there.
It is
Okay, I will
there.
check up. Thank you.
It is there, sir. In our childhood, in our college days, we used to talk of Paris problem. Like you buy a shop a new dress, by the time you go home, the design will change. So like that, by the time I started preparing for this, the second June also has come already. So anyway,
It has become more like a newspaper. No, every day you have to.
yes, yesterday is right.
Many more to come.
I
No,
think no.
in fact, sir, in fact, what they say is that if there is something missing in this, tell us. No problem. We'll do one more amendment. Sir, for them it was so
No,
simple.
just so that people don't misunderstand, we think pace of amendments that come in IBC is very high, especially regulation. Just look at Companies Act. All those who are practicing company secretaries know. Look at income tax. Look, they do every 3 months, 2 months for years now. Years. So it is not new. We are not accustomed to it. We think it is. So hota hai, part of life. Amendments are in general way forward, right? They are not backward in general. So good, no? Whatever problems are being faced are being addressed. That is the whole intent of regulatory power.
Somebody is solving them.
Yeah, but it should be once in a 2 months or 3 months. At least for 2-3 months they should wait and wait.
Then for 2-3 months after the regulation comes, there should be no complaints also. कि ये इसमें ये problem है. See, we as IPs, we never look at draft regulation. Most of us, we don't comment. We don't, take it up. And when the final one comes, then we have 200 problems with that. So yeah, we are also liable.
Nowadays, keeping track of all that has become very difficult. They should work or keep track of this. This is the main question.
Part of life. Okay.
Thank you, sir. Harish, sir?
Yes, sir.
I think 9:26.
Yes. I think no more questions. Any questions? Another 1 or 2 possible? Okay. Assume that no questions. Thanks, Ravi Shankar, sir, for detailed explanation of all the regulations. And thanks for the members for attending. Have a nice day.
Thank you, everyone, sir. Thank you, sir.
Thank you very much.
Thank you.
Thank you.